Hey, what up, family? It's your favorite uncle, cousin, Tyrone Gregory, and today I'm going to talk to you about s-corps. But before we begin, as always, don't forget to smash the subscribe button, give it a thumbs up, and hit the bell icon to be notified when I unleash the next video. Why would they give it a thumbs up if they haven't watched it yet? That's a good point. Okay, so wait till the end of the video, and if you like it, then give it a thumbs up. So lately, I've received a lot of messages concerning s-corps and the fact that I failed to mention them, as if there's something everyone needs to know about. And I guess as of this video, the topic of s-corps is trending, which is why I'm assuming people are wondering why I haven't said anything about it. So today, I'm going to talk about them. As a matter of fact, I'm going to specifically show you how an s-corp can save you some money. But, before we begin, please understand that s-corps ain't for everybody. Yes, they sound sexy and exotic, and everyone is saying that you need one, but not everybody needs them. Just like everything else in business, yes, they have their place. Yes, they do serve a purpose, but there is also a specific time when you should consider being taxed as one. That's why the only thing that I'm going to show you in this video is how the s-corp can save you some money if it makes sense for you to be taxed as one. So let's get to it. All right, so the first thing I want you to know is that an s-corp is a type of taxation. It's not an actual corporation, meaning you cannot form an s-corp the way that you would an LLC or regular corporation. And because of that, the only thing that an s-corp is a type of tax strategy. A tax strategy that can save you some money by reducing your taxes when you get to a point where it makes financial sense to be taxed as one. Because if you do it before then, it will cost you more money than it will save you, which is stupid. How does an s-corp reduce your taxes? Well, to understand the answer to this question, you must first understand two things. The first thing you must understand is how you're taxed as a sole proprietor or a single member LLC. And the second thing you must understand is what that tax is and how that tax is applied to you as a sole proprietor or single member LLC. Let's get to the first lesson. So as a sole proprietor, you are taxed on 100% of your net profits, which includes the amount that you pay yourself. And that's important to note. I'm gonna say that again. As a sole proprietor, you are taxed on 100% of your net income, which includes the amount that you pay yourself. You see, as a sole proprietor, you cannot pay yourself a salary, a W-2, or wage and write it off. Yes, you can pay yourself, but the way you do so is by taking a draw. And that's the thing, is just that, a draw, not a payment. And because it's not a payment, it's not deductible. So that means that no matter how much you draw from the business is not going to reduce the amount of taxes that you pay. Speaking of taxes that you pay, let's go to lesson 2. Generally speaking, as a sole proprietor, a single member LLC, the taxes that you pay are the federal, the state, and what is known as the self-employment tax. And that's the one we want to focus on, the self-employment tax. You see, the self-employment tax is comprised of 2 federal-only taxes, the Social Security tax and the Medicare tax. And Every U.S. citizen pays those taxes regardless of if you are self-employed or working for a company. But here's the thing. As a sole proprietor or single member LLC, you pay self-employment tax on 100% of your net income, whereas as a W-2 employee, you only pay half. And therein lies the problem. Let me give you an example. Let's say that you made $250,000 in sales, but you had $150,000 worth of expenses. That would leave you with a net income of $100,000. And then let's say of that $100,000 you took for yourself to cover your living expenses, $80,000. Well, as a sole proprietor or single member LLC, you would still be responsible for paying the federal, state, and self-employment taxes on the full $100,000, not $20,000. And this is where the magic of an S-corp can save you some money. You see, as an S-corp, you can actually pay yourself a W-2, a salary, a wage, and write it off. The reason that is because the IRS sees the payment that you made to yourself as an S-corp as a payment being made to a separate source, as opposed to when you make a payment to yourself as a sole proprietor or single member LLC, the IRS sees it as a payment being made to the same source. And that's why they classify the payment as a draw as opposed to a deductible expense. You see, in the eyes of the IRS, in order for something to be deductible, it must be paid to something or someone outside of the entity itself. Let me give you a visual example. So when you are a sole proprietor or a single member LLC, or even a partner in a general partnership, the IRS sees you as one single entity. There is no separation. There is nothing separate outside of yourself. So any payment made is going to come from you back to you. So technically, there really was no transference of income, transfer of money. It didn't go to a separate place. So they don't consider that a payment, and therefore is considered a draw, which is why it's not deductible. However, on the other end, if you were to become an S-corp, what happens is that same individual now gets separated into two. Again, even though it's the same individual, the IRS then views it as two separate individuals. As you'll see, on one side you have the S-corp, and on the other side you'll have the owner, even though it is the same exact individual, but this is how the IRS views it. And what happens is anytime you take a payment from the S-corp, it goes from the S-corp to the owner. Again, you see there was two separate individuals, and the payment went from the S-corp to the owner, and because of that transaction, it didn't go back into itself, it went to someone separately. That's why they consider that an actual payment, and therefore it is deductible. So as you can see, when you are taxed as an S-corp, you are, in the eyes of the IRS, a completely separate entity, and therefore when you pay yourself, that payment is being treated as if it's being made to someone outside of the entity, and therefore deductible. And this is where the magic happens. So now that you know how you are taxed as a sole proprietor or a single member LLC, and you know what the self-employment tax is, let's put it all into perspective. We now know that the self-employment tax is comprised of the two federal taxes, the Social Security taxes and the Medicare taxes. We also now know that those are the same two taxes that we pay as employees, as we can see here on the W-2. And this is where the magic of the S-corps happen. But to better understand the magic of S-corps, we have to look at the numbers. As of the recording of this video, Social Security is taxed at a rate of 12.4%, and Medicare is taxed at a rate of 2.9%. And those two combined together gives us the 15.3% self-employed tax rate. And what that means for sole proprietor or single member LLCs is that you pay the full 15.3% tax on your net profits. However, as an S-corp, only the amount that you pay yourself as a wage is going to be subject to the Social Security and Medicare taxes. The remaining amount will be reported on your personal tax return as investment income, not subject to self-employment taxes. Did you catch that? But not only that, on top of the fact that you can now deduct the amount that you pay yourself, you can also deduct the employer portion of the Social Security and Medicare taxes paid. Boom! Magic. Let me give you an example using this calculator that I developed to show you how this works. All right, so to show you exactly how this works, here I developed this calculator, and you'll see that on the left side, you have the estimates as a sole proprietor, and here on the right side, you have the estimates as a S-corp. So the top box here, the net amount before wages and payroll, this is the amount that I'm going to enter as my net profits after I've calculated what my gross income is, subtracted out my expenses, what I'm left over. That's the amount that I'm going to put here. And for this example, I'm going to say that that number is going to be 100,000. Right? So we put 100,000 in there, and I hit the tab. You'll see it automatically starts to do the calculation for me. Now on the left side, as the sole proprietor, we'll see that the total SE tax comes up to an estimated $14,130. Now, again, that's just the self-employment tax. This is not taking into consideration the federal, state, or any other taxes. This is just showing you how it's going to save you on the self-employment tax side. So we're going to take that same wage, $100,000 net amount, and we're going to say that we pay ourselves a reasonable salary of 40%. Okay, so I'm put 40% here. Look what happens. So 40% of the 100,000, that means I'm going to take the total W-2 home. I'm going to pay myself out of that 100,000. I'm going to pay myself 40,000 on the W-2. The total payroll taxes is what we see is going to come up here. But on the other side, though, the far right side of the S-corp estimate, we're going to see the net income minus the wages, right? This is how much is going to be reported on the S-corp side. Because remember, I do get to deduct the amount that I pay myself. So I'm not being taxed on 100,000. Technically, I'm only being taxed on 60,000 as a business. Still paying the payroll taxes, but I do get to deduct that. Now we'll see the final amount, the K1, because that's what you're going to receive from the S-corp, is going to be $56,940. But if we look at the bottom here, look at that number, right? The total taxes paid, the difference between the two, the difference between the self-employment taxes paid as a sole proprietor versus the self-employment taxes paid as an S-corp. That is a savings of $8,010 just without doing anything extra except for being an S-corp. So now you know how an S-corp can save you some money. The only question left to ask is, do you need to be taxed as one? And yes, there are a few more things that you can do as an S-corp, but reducing your self-employment tax burden is the main way S-corps help save you money. Like I said in the beginning of this video, yes, S-corps are attractive, exotic, and everybody talking about them. But please keep in mind that there is a lot that goes into becoming and maintaining an S-corp. So as with anything else, make sure that you do your research. If you think you fit the profile to be taxed as an S-corp, have a conversation with your tax professional. If you don't have one, get one. Go to www.scorp.co for more information if you don't have a tax professional. And if you are just starting out, please be mindful that there are certain steps that you have to take first, certain milestones that you must reach before you consider being taxed as an S-corp. So please know that there are a lot of other options available for you to get started. Options that will save you so much time and money. Remember, S-corp status ain't for everybody. Your goal should be to start smart, finish strong, stay broke, and stack. And on that, I'm out.